Okay, so it seems as though crypto has sold out on us and gone mainstream, it seems. So at the time of recording, crypto tokens and cryptocurrencies have been pumping all over the place, with Bitcoin going up in value, Ethereum going up in value, and a number of altcoins also following that particular trend. And it does appear to be a perception around wider adoption, and more specifically, companies, governments, and institutions acquiring things like Bitcoin to build treasuries. So with private companies, for example, what we've been seeing with what was called MicroStrategy initially, and that was a business that was basically selling basically software solutions, but then shifted towards simply building a Bitcoin treasury, and it saw a massive boost in the business's valuation. And another of other companies have followed that trend, and as I mentioned before, a number of institutions and governments themselves have also adopted this strategy to some degree, and that is the general perception as to why we're seeing these pumps in valuations and demand for these particular tokens, Bitcoin in particular. So basically, there does appear to be a shift in terms of how crypto is being viewed. It's definitely become a much more bullish sentiment. And I think that's a large degree to what we're seeing happen in the US, and certainly the position of the Trump administration, who clearly are bought into the technology and have taken advantage of it in terms of their own initial coin offering in order to monetize their political base in terms of the token that was created, the Trump token, I believe it was. I'm not sure what it was called, but yes. So clearly, he is behind it. He's bullish on it. He supports it. His sons have been talking about ETH, and again, sort of hyping that up and pumping that. And obviously Bitcoin as well, where there was a view around, again, the US basically building a Bitcoin treasury as well. So I think these are positive signs in terms of how the technology is being viewed. And specifically, I wanted to talk about two acts that has had bipartisan support in the US. So what that means is that these acts were basically supported by both the Democrats and the Republicans, which means that if the Democrats were to come into power, we wouldn't expect to see these acts challenged or repealed, which I say is a positive signal in terms of legitimizing crypto technology and also that wider adoption piece. So I think this is a good thing. So the two acts in particular are the Genius Act and the Clarity Act. And these basically supplement and add on to the wider framework of legislation and regulation that covers crypto technology and cryptocurrencies more generally. So in previous videos on my channel, I would have talked about things like the OECD. We would have talked about the CARF, which is the Crypto Asset Reporting Framework. There's obviously the SEC, so that's the Stock Exchange Commission, I believe. And also there's other legislation that would be relevant, like the FATF, which deals with the travel rules, I believe, where we have to indicate the source of crypto transactions and the beneficiary of the crypto transaction as well. So it's basically an anti-money laundering type legislation. So essentially what the Genius Act does, and this is the one we'll talk about first, is it basically provides a regulatory framework with respect to the issue of stablecoins. So what it does is it's intended to provide more confidence to the market around stablecoin issuance. It places requirements on those that wish to issue stablecoins. So that will include things like maintaining a treasury and having a 1-to-1 ratio of real US dollars alongside any stablecoins that are issued. There will be additional reporting requirements. And it will also mean that anybody outside of the US that wants to issue stablecoins must also adopt legislation that mirrors what the US has as well. So basically, this legislation and this act should basically just provide more confidence around stablecoins. it should allow more participants into the space to, again, issue their own stablecoins now that there is a bit more clarity about, what the requirements are. And ultimately, that increased competition should be for the benefit of retail investors. And when I say retail investors, these will be individuals like you or I, as opposed to institutions or businesses. So I think this is a really good signal. I think it basically allows the US to keep positioning the US dollar as the world's reserve currency, which was potentially going to be challenged by the BRICS nations, who were looking at crypto technology to basically as an alternative, so that again they were not necessarily exposed to basically potential economic sanctions or having the US leverage their position as having their currency as the world reserve. So I think in many ways it's helpful to the US, but I think it's also good in terms of again legitimizing the potential around cryptocurrency. So I think if you are somebody who has believed in the potential of cryptocurrency, this is a vindication of sorts. And it's basically taken us towards this journey of this wider adoption, just more generally. So I think this is a positive sign in that regard. The other act I wanted to talk about here as well is the Clarity Act, which again is quite an apt name in terms of what it's intended to do. So what this act is intending is essentially to give clarity, as the name suggests, around which assets fall under which regulatory framework. So what this will mean, for example, and again, the way it's determined is based on the characteristics of the token or the asset itself. And what this will mean, for example, is that if you have an asset that confers voting rights, governance rights, you know, rights to income streams, for example, then it will fall under one regulatory framework. But if it doesn't confer these rights, then it will fall under a different framework. So again, what framework it falls under will be determined by how the asset itself is classified, and the rules around the classification have also been, as I say, clarified. So again, this is good because what it allows institutions to do when they mint or instantiate new tokens is understand the accounting, reporting, and regulatory framework they're working under. They can proactively manage that through self-certification, for example, initially. And again, it's a signal of legitimization of their project because, as I say, it's falling under regulation, which basically means the government is implicitly accepting it as a valid technology, I would say. So I think, broadly speaking, this is a positive sign. I think it's a bullish position, and I think for me, it's encouraging that we have the US and the Trump administration, and we do have to give kudos to the Trump administration because it wasn't forced through executive orders; it did get bipartisan support. Um, that we are looking at this new innovation, we are looking at this new technology, whilst the previous administration, which was the Democrat administration, had a more conservative view and a more prudent view around crypto technology, which, again, depending on how you feel, is not necessarily a good or a bad thing. But I think from my perspective, I think it's good to have a pragmatic approach around new technology within reason, and not get hung up around the potential issues, depending on what they are, because ultimately the greater benefit will outweigh the potential cons. And I think for me, crypto is in that space, despite the reputation it may have in terms of rug pulls and things like that. So yeah, I think this is good. I think again, it's encouraging to see that governments, now that the US have done what they've done, are following. So I think the UK and the Labour government are now following their lead in terms of they've been talking about more recently tokenized versions of commodities, stocks, and gilts. Gilts being instrument the government uses to basically borrow money. And obviously, what we're seeing in the UAE as well is tokenization or digitization of real world assets. So these will be things like, again, shares, commodities. They're looking into things like, deeds in terms of home, ownership of your home. And basically, it's just creating a virtual version of this real asset, but on the chosen blockchain. So I think for me, this is good. It's encouraging the sentiment and the shift we're slowly seeing, and the fact that crypto technology is becoming more normalized by way of this regulation and this wider adoption and this wider awareness. And as I mentioned in previous content before, what this will also mean is that there are opportunities for governments that do embrace this to think about how they can, put in place things like making tax digital, for example, and also tracking crypto transactions in order to make sure that tax evasion is basically crypto technology is not being used for the purposes of tax evasion. So, although tax is not necessarily viewed as a good thing, I think it does provide opportunities for wealth creation, for more liquidity, for growing capital and growing your economy, whilst at the same time enabling the governments to benefit from that if they fully embrace it from a tax receipts perspective as well. So yeah, so I think it's encouraging. As I said, kudos to the Trump administration because, as I say, love or loathe them, love or loathe crypto technology. I do have a positive outlook on this from my own perspective, and I think something that is encouraging innovation, I would view as a positive thing. So let me know what your thoughts are in the comments. I hope you found that useful. But otherwise, till next time, peace.